Here we go. Already testing 1 2 3. Alright, looks like it's working for most people. Looks like it's working on my end. Alright, everybody can hear me? It seems like nobody's complaining. So, what we're going to go over today is I've got 3 sequences of film to watch, all from this week so far. And then I just want to kind of dive into some charts and go over some monthly chart setups into the new year and kind of talk about what I feel like the setups are, and yeah, just kind of start preparing ourselves mentally to start thinking about trends into next year. The first thing I want to do though is I want to review film, and there are 2 types of film that we're going to review. The first is going to be from today. It is going to be Google's price action off the opening bell, where I felt that the stock was doing pretty well right out of the gate, and so I decided to buy in. And I want to talk about some of the things I saw going on that gave me that confidence, and why I was able to buy in the first 90 seconds of the day. So again, what you're looking at right now is footage from today's morning session, December 29th, 2015. And we're starting out here. First thing I want you to notice is that Google was gapping up 0.5% and 17,000 shares traded pre-market. That's heavy volume for Google. And second thing I want to point out is off this open right here, we immediately went higher. We end up opening at 787. Anytime you get a gap up, your opening price is a very, very important reference point. Anytime you get a gap up, your opening price is a very, very important reference point. So in this situation on Google, I opened around 787, and I know there's a gap, so I'm watching that opening price very closely. Netflix had gapped up as well. Netflix had came below its opening price right away, so Netflix isn't really on the radar for me. I'm going to switch back to Google here because I noticed that Google is doing a good job holding over its opening price. You see right here, Google's right at 787 on the asks. It tries to downtick, but check this out. Look at that deep bid stack right here. Look at these deep bids here, 786.19. You have a number of bids right there at that 786.19. And again, we opened at 87, so you're still right around the opening price. And what I'm watching for is when it does come back above the open, what do the bids do? Do they move higher? Do they stay the same? Do the asks come back down? Notice those upticks right there. You see that? I'll rewind it in a second to show it again. So here we are. Bid stack has gone from 786.19 to 786.40, and I want you to pay attention to how the bids continue to uptick towards 787. There's another slight uptick. Now we're at 86.80, 86.81, 86.82. Continuous upticks right there, All the while, we're not getting any downticks by the asks. The asks aren't coming back below that opening price of 787. So what I start to think about here is a chase trade or a momentum trade, whatever you want to call it. And my reference point is going to be that opening price area. Anytime you enter a trade or consider entering a trade within the first few minutes of the day, you have to be very good at interpreting the opening price action, because we don't have many reference points yet. Reference points become more available as the day goes on. When we're trying to make trades the first 2-3 minutes of the day, we don't have the benefit of that information because it's so early in the day. Now you can see we continue to get these upticks, and now we're starting to get some stacking above 87. You can see I've started to get an order ready, a buy order ready at 787.50, just for a small amount of shares, 7 shares. And the whole reasoning here is that the stock gapped up, number one, gapped up on good volume, number two, and just pausing to show I did take the position here. And again, the reason I'm taking the position is because the stock is really doing a great job defending that opening price after a strong gap higher. So I feel there's continuation potential here. So I've bought 7 shares at 87.60, and I just want to keep paying attention to the bid side of the level 2. And I also want you to notice how the asks are having a hard time coming down. And the concept we talk about a lot is who's winning the battle. Level 2 is always a battle. You've got bids battling with asks. Who's winning the battle? If the bids are winning the battle, then the stock's going higher. If the asks are winning the battle, the stock's going lower. In this case on Google, I just want you to pay attention and think about that question. Who's winning the battle? And I think you'll see that it's pretty clear that the bulls are just in charge the whole way. So we'll let some of this play out a little bit. So here's another great example where the asks try to downtick. We try to whack out those 87 bids, but let's see what happens. Boom, right back up. I'll rewind just to show that one more time. You get some downticks by the asks, and my antennas always go up when that happens. What happens when the asks downtick? Do we keep downticking, or do the bids pop back up and play defense? In this situation, you're going to see them pop back up and play defense. That's a great tell right there that dips are getting bought. How do you know dips are getting bought before the chart says that a dip got bought? You see it happening on level 2 with your own eyes. Look at the continued upticks by the bids. Here's another instance. Asks try to downtick. 87.75 stacking on the ask side. 87.63 downticks. Took those out. Took out the 75s. Have some stacking at 87.80. One ask came down, 87.57, takes it out right away. All the while the bids are staying strong in the 87s. Again, notice there's just not many downticks by the asks. The bulls are already in charge because they're the ones that gap the stock higher. They're the ones that pushed above the open. So they already get the benefit of the doubt. To me, I generally assume the path of least resistance is the path that the stock is already going. So in this case, I'm not concerned that it's not continuing higher right here, right now, because I'm just trusting that it'll keep going higher once it works itself out. as long as it's not turning around, then there's no reason to bet against the trend continuing. Now you're testing 88s. I want you to pay attention to what happens by the bids again on this break above 88, because you're going to get a really solid continuation move right here. Bids again popping higher, asks failing to come down much below 88. Look at these upticks right here going on in the bid, 87.72. Look at that deep stack here at 87.60. That's a lot of bids. Still no downticks by the asks back below 88. Each time the asks tries to come down to 88, it immediately gets taken out. Bidders getting closer to 88 on the bid. 1,000 share bidder, 87.90. Still no asks below 88, so the bid's just kind of working their way. I continue to trust that the move is going to pick up and get going with greater velocity based on the trend and based on what I'm seeing on level 2. Bidders showing up at 88. That's our first bid at 88. So this is where I start to think we're going to move now. Nice stack above 88. Staying on the highs here. Look at that stack right there. 88.37, really deep 38, 41, just upticking away. No downticks at all by the asks. 42 bid stack now. Now you're testing 89. You've got a bid stack 88.77. Moving through some 89s. Look at that stack going on now above 89, and now we're printing 90s. So that's a great move, being able to buy 787s and sell 790s, which I did end up doing later in the day, off that gap and go. That's a good example of a gap and go, which we don't often see. Usually gaps kind of come back down in their direction. I'm sorry, in the opposite direction, but what you want to look for when judging a gap and go is how does it handle that opening price? How does it handle the opening price? Does it start getting extension above the opening price? Can it hold the opening price as support? With Google, we go back to the open and it held that 87 level pretty well for the most part. And I just want to point out, I traded shares. I'm just kind of playing it safe here these last few days of the year, but those 790 calls on that 87 action, they were 340 by 380 when I first bought my shares, and now as the stock went higher towards that 90 level, these went 420 by 480, and you ended up getting some prints at 480. So really nice move by those right out of the gate for people who are trading options. And we could have kept this video going, but the bottom line is Google showed the same thing pretty much all morning. The ask activity had a hard time coming down. When it did come down, they got taken out, and the bids were just consistently moving higher pretty much all morning long until the stock decided to pretty much just consolidate the rest of the day after about 11:30. Any questions on that? Alright, this next footage that I want to show is also from today, but it's going to be a different type of setup. It's going to be, oh okay, we do have one question. There's no stupid questions, only stupid answers. What do I mean by taken out? Good question. So what I mean by that, we'll bring this Google footage back up here, and I'm going to rewind it a little bit. So taken out refers to, I'm trying to get to an example here. Okay, so check out this right here on my screen. We're right at 9:34:35, 4.5 minutes into the day, and Google has started to move higher, and we've got an ask stack underneath 89. An ask stack is when you have multiple orders or multiple sell orders at a congestion of prices. So in this case, we have 3 sell orders at 787.85, 4 sell orders at 787.86, and 4 sell orders at 787.87. So you have a lot of ask stacking right here around 87.85. So when I say I'm watching to see if these get taken out, what I mean is I want to see orders go through at the ask, and I want to see the price go above 88. So I clicked play here, and as we'll see, we do get some good action where it takes out those asks. And the significance of that is that if you're not taking out the asks, then those people are probably going to lower their sell orders, and it's going to cause pressure on the stock. So I'd be a little bit concerned. But as we saw right there, it's taking out the asks. So there's upside pressure. There's 3 types of pressure: no pressure, upside pressure, and downside pressure. Right here, there's upside pressure. One of the ways you observe upside pressure is by seeing when the asks come down, do they get taken out? Good question. Alright, so moving on and looking at a different type of setup. Google, that was a gap and go play from today. This setup on Amazon also was it started out as a gap and go, but I was trading Google instead of Amazon. Amazon would have done even better though. Perhaps you can see on this 3-minute chart the gap and go setup. But at any rate, at this time now, we are an hour and 15 minutes into the day. It's 10:45 just about. Amazon's high is 690, and it has started to pull back to 686. And the all-time high coming into today was 685. So I have at this time taken a position in Amazon at 685.92, and the reason I've taken a position is because I like the trend, I like the big move higher, and I felt like it's finally started to pull back a little bit, so this was a buy the dip entry. And I want to talk about what I was watching for that kept me in this trade even as Amazon kind of tested that 85 support, and why I still stuck with it and ultimately was able to get a good trade out of it. So right now, just by the way, I bought this at 85.92. I bought this because I felt like 85 would hold, and I was kind of guessing. I did not buy this after seeing 85 hold. Actually, what we're going to see is we're going to see Amazon come down closer to 85 and potentially shake me out, but I end up staying in here. So I just again want to talk about the action and kind of talk through things here as it plays out. And what I want you to notice is how when we're coming below 86 on the ask side, it's not going immediately down to 85. Where I would stop myself out is if the stock starts breaking down below 85 and really selling off. But a couple things that I'm mindful of at this juncture of the day is, number one, it's a bullish day. I say that because the stock's up 1.6%. It's making new all-time highs. The volume flow is very good. All right, so the bulls are in charge. So the path of least resistance, in my eyes, is to the upside, because that's the way it's been going all morning. So why am I going to bet on downside without seeing it reverse? So when I see it pull back, in a slow fashion, I start thinking about a buy the dip entry. The other thing that I was mindful of here is it took Amazon about 10 minutes to go from 84 up to 690, 684 to 690. It took the stock about 30 minutes to come back down to the 685, 684 range. So in terms of the velocity, I was looking at this like, all right, well, she's holding, she's coming down, but she didn't come down that fast. It was more of a steady move down after a very aggressive move up. So now I've taken the position, and it's a matter of watching level 2 and determining, am I still seeing the signs that I need to be seeing in order to stay in? So here's an example where we get the downticks by the asks. You see this, we're starting to stack 85, 75. And notice that I have my mouse, my cursor, over the close button to just exit the trade right away if it does start breaking down against me. But while we've gotten stacks, it hasn't aggressively come down to 85. And even if it does come down to 85, the asks are going to need to really sustain a move below 85 to get me concerned. We're coming down, we are down ticking, but it's slow down ticks. Still just doesn't seem like a ton of pressure. I had bought shares at 85.92 to trade versus 85 to 84. Keep that in mind. So I bought slightly above my stop loss. And you see that we start taking asks back out. We still have some stacking below 85, below 86. But again, it's not the aggressive stacking. It's almost like somebody that annoys you just by being in the room, even though they're not doing anything. Well, that's your fault for being annoyed. All right. The stock right now, when it comes below 86, yeah, it's a little annoying, but in reality, it's not doing anything to ruin my play, if that makes sense. We're just kind of slowly churning around. The big thing about defense, which is what I refer to this, Amazon is playing defense in the 85 range, is it defense being played after there was already a good move? In other words, are you betting on a continuation of the move? Or is it defense being played where there's been a bad move and you're now betting on a reversal? I'm betting on a continuation higher. It's not like Amazon has been downtrending and I'm trying to time a bottom perfectly. That would be a little bit different, because then I'd want to see a faster pace. I'd really want to see these bids popping up. As it is here, I just want to see things staying steady, because I trust that as long as we stay steady above or around 85, eventually that momentum from the first 30 minutes of the day is going to start to come back in. So here's another time where we get some stacking, start coming down. More down ticks, getting closer and closer to 85. And this is where it gets important, because if it whacks out 85s, what happens next? Anytime we get to a round level that, acts as my stop loss, it's that question: what happens next? When you go below your stop loss, do the bids immediately recover back up, or do the asks immediately start coming down, and does it look like it's going to keep selling off further? You're right on top of 85 here. So this is where I'm paying real close attention, particularly to the ask side, because I want to see, what do those asks do if it comes below 85? What does the reaction look like? Is it a aggressive reaction lower? So here we are. You've got a stack at 85. Trying to get below 85 here. Immediately takes them out. I rewound it just to show it again. And I want you to try and count how many seconds you see an ask below 85 on Amazon. All right, 1, 2, 3, 4. All right, so 3.5 seconds. We only had asks below 85 for 3.5 seconds before they got taken back out. Now let's see if they come back down beneath 85. Now I'm still in this trade because, again, yes, it's testing 85, it's testing my stop loss, but it doesn't appear to be committing below 85. And as you're seeing, we're not getting down ticks back to that 85 level. It's still just kind of slow, kind of steady. Here's another chance where it has every chance to get below 85 if it wants to. The asks are at 85.25, but instead of doing that, they get taken back out towards 85.50, and you're going to see it start coming back up near 86. So that is a successful defense of that 85 range. And the takeaway here, the lesson, is that when your stop loss gets tested, in this case my stop loss was the 85 area, you want to see, do the asks commit below the level you're using as your stop loss? This is why I use mental stops as opposed to physical stops, because if I put my stop loss at 85, I get stopped out right there, right at the bottom. But with a mental stop, I can watch it, I can see it with my own eyes and react to it, and my reaction there is, that's actually not an 85 breakdown, that's an 85 bounce. So just before you stop out, try and have a feel for, hey, how long is it staying down there? If it stays down there, we counted 3.5 seconds that we had asks below 85. If 15 seconds, 20 seconds go by and you still have ask pressure below your stop area, then you need to think about executing that mental stop, because you could be in some trouble. But in this case, as we saw with Netflix, it was only, with Amazon, it was only a couple seconds that those asks stayed below 85. And I want to fast forward just a little bit as the stock now, and this is after, again, bouncing off of 85. We never came back below 85. I only fast forwarded 3 minutes or so. But now we're testing 86s, and I want you to pay attention to how quickly it's able to move through these 86s compared to how slowly it was moving through the 85s. It stayed in the 85s for about 10 minutes without really going anywhere. You're going to see it move through these 86s within a matter of like 90 seconds or so. And it gets back to that point about the velocity of the move. When it goes down, how quickly does it do it compared to when it goes up, how quickly does it go up? If you're going up much faster than you're going down, then to me that's a sign of a upside pressured stock. So you still got some stacking below 86. You asked the question on the Google example, what does it mean when you say taken out? Here you go right here. Perfect stack below 86, and you're going to see these asks get taken out back above 86. And it's just more evidence that the stock is starting to turn around and is about to start rallying again. So there those asks got taken out. Still dealing with 86, but you're going to see the pop here. I mistimed it a little bit. Should have fast forwarded a little bit more. But again, when you see the pop, it's going to be quick, it's going to be fast. It's going to be much faster to the upside than it was to the downside. You can see now it's starting here, 86.50 being tested. Now coming right up towards 87. Nice bid stacking going on. So just all in all, and all in all though, you know, after you get a bounce like this, now it's nice because now you just use that most recent low as a really hard stop. Now there's no reason to go back to 85 at this point. It started to bounce. Like I said, you see how quickly it moved through those 86s right up to 87 once it finally got going. I don't think it took more than 90 seconds. And just good pace, good speed, and just good buy the dip type play. That's exactly what you want to see. I love buying the dip when the stock has already made a strong move higher and then it washes out a little bit, comes down, but defends around level, you know, something like a 685 or a 680, anything that ends in a 0 or a 5 qualifies as a round level to me. Any questions on that? Again, the key takeaway is when you're testing your stop loss on your buy the dip entry, what does the ask action look like? Do they stay down there or are they able to get taken out? As we saw with Amazon, the asks did not stay down there. They were able to get taken out pretty quickly. Any questions on that example? So was my entry based solely on that round level? My entry was based on the fact that the stock had ripped higher and gone from 680 to 690, you know, prior to me entering it. So I knew that there was upside momentum because of that move, number one. Number two, the all-time high coming into the day was 685. So in my head, after you go to 690, I want to buy as close to 685 as possible because previous resistance has a way of acting as new support. So 685 is around level. It was also the previous all-time high. It also happens to be midway between 80 and 95, which was the move that it had made, that I had seen it make. So there were a couple different things going on there that had me entering where I did. The reason I didn't enter solely based on 85, I entered because it was getting closer to 85, and 85 is my stop loss area. So the closer I can enter to my stop loss, the lower risk I have with the trade. Yeah, it is very specific. 85 was very important for my setup. Okie dokie. Now lastly for the film session, we're going to look at Netflix from yesterday. This is yesterday. Netflix was downtrending all morning. You can see on this chart in the upper right corner, stock had gone from 117 down to 114. Just a nice clean downtrend. I don't make an active trade on Netflix, so I'm not going to talk about a trade, but I'm going to talk about what I saw as it happened, talked about a potential bottom, and one of our members made a really sick trade on Netflix near the lows yesterday because of this bottoming action. And what I want you to watch for here is, again, the concept of asks going higher, getting taken out. All morning long, there had been tremendous ask pressure on Netflix. It had just been stacking lower and lower. Every time it made a new low, it came down. Every time it tried to bounce, the asks came back down. All right. In this situation, this is about around 10:50. Netflix is going to make a new low, and there's finally going to be a bounce. So I'm just going to let this play out and talk through some things here. Again, up until this point, there hasn't been a good bounce on Netflix all day. Most bounces had been like 50 cents or so. Most bounces had been about 20 cents or so, but then this bounce that it ends up making is good for about 50 cents. So we're still just staying on the lows in Netflix. It's going to happen in the next 3 minutes, the action that I really want to talk about. So here it comes. You're coming down towards 114. You're going to make a new low at 113.85, and I want you to pay attention to when it bounces off that low at 13.85, how it immediately pops back towards like 14.20. It happens very quickly. It would help if I didn't switch to look at Google in the middle of it. I swear, when I watch film, that's the thing that annoys me most, when I jump away from a trade that I'm watching. The reason it annoys me is because I should try and focus on the more immediate action. But here we go. So Netflix testing 13.85 here, and it's making the low. Notice though, the ask's not staying below 14 on this new low a day. They try and come back down. We've got some stacking back below 14 again. It's still trying to stay on the lows, but it's coming up right here. You make a new low, and then you're going to take these asks back out above 14 again, where the difference is all the other lows flushed to new lows. Stock just kept going lower and lower. This low reverses back up and gets back to where it was just about 5 minutes ago, which is a difference on the day compared to how it had been trading. So there you go, right back towards 14.20. And I want to show the intraday chart also to kind of point this out further, what I'm talking about. And This is a 3-minute chart of Netflix. So it's a 3-minute chart I'm showing on my screen right here. And notice you've got a lot of lows on the stock, once it started breaking new lows right here. And you just take this whole sequence really from 9:45 to 10:45. You don't have one 3-minute candle that makes a new low a day and then was able to bounce 50 cents. The biggest bounce you got off of a new low a day by a candle was 15-20 cents. So then when you got this candle down here, alright, where you make a new low, but then the candle shows you the bounce right back up, and this was a 50-cent bounce, just about $13.85 up to $14.30. That's your sign that, okay, maybe this thing's finally exhausted and going to start reversing. And I want to show level 2 now. I want to jump back to the level 2 footage so we can see that again. And it gets back to the point about level 2 will show you things before they start to materialize on the chart, and then you can kind of look at the chart for confirmation of what you think you might have just seen on level 2. So as I rewind here to go back to the 1385 test, I just kind of want to again embed it in your brain, how it makes this new low below 14, but within 30 to 60 seconds it comes right back up into the range it was just at. So here's the new low at 1385. That's at 10:52.28. Let's see how many seconds it takes to come back to 14.20 after making that low. 10:52.28 is when it happened. So within 25 seconds, we're right back at 14.20. So again, it didn't stay down there that long. We're starting to see a better bounce. And within 35 seconds, now we're back at 14.30. So at this point, we have a possible bottom in Netflix. And now this is where I would then consult the chart and say, okay, what do I want to see now in order to trust that the stock isn't going to end up making more new lows? Well, what I notice is the second candle off of a new low. In other words, the candle that's trying to hold a bounce. So for instance, let's zoom in a little bit. Can you guys see? So this candle right here, this is the second candle following a new low, if this is making sense. That low each time has ended up failing. We move forward here. So here's another one where here we made a new low at about 1:15, at about 10:15 in the morning yesterday. And then you get this second candle right here. Alright, I can plot a horizontal line here to make this clearer if that helps. And notice that later on we end up breaking down below that potential higher low. And what's important here is that we're trying to establish some higher lows. That's how you start setting up a bottom in a stock. Well, so far to this point, Netflix hasn't established any higher lows. each time it tries to bounce, it comes back beneath it. I'm just moving this horizontal line around to show you the different areas where it could have tried to bounce, but instead failed to do so each time. So now, thinking about the action we just saw, we finally gotten a bounce. Now I want to see this second candle here, this second low. I want to see if that can now start holding as support, because if it can, now we're not breaking back down towards lows. And as we go forward here on Netflix, you can see that it does end up holding that 114.15 area. In other words, it starts to put in a higher low, and you can see the result was the stock makes a really nice uptrend the rest of the day from 114 all the way up, from 114 down here all the way up to the 116s, and then today Netflix just continued going and ended up hitting, up in the 119 area. And as Patrick is saying in chat, bullish hammer, reversal candle. That is exactly right. That's what I'm getting. That's a much shorter way of saying it. So some of you familiar with this, and that's what it looks like on the chart. I'm trying to help you see what it looks like on level 2, so that you can kind of get ahead of the chart. But that's exactly right. Bullish hammer, reversal candle, and those are some of the most powerful reversal signals in my experience, especially on a stock that has underlying strength. Netflix has been uptrending for years. It's been uptrending all this year for the most part. So when a stock like Netflix posts a candle like that after it's gone down, significantly on the day, you start looking for that potential reversal, and it would have worked very, very well in Netflix. So the candle shows what has already happened, and the stack shows what's in real time. That is exactly how I want you to think about things. That's what I always say. So that's your interpretation is exactly right. The chart will show you what has happened. Level 2 can help us identify what's happening in real time, as you say, and it can help us kind of get out in front of the chart. Because if we wait on our chart signals, then yeah, we'll get good entries, but we won't get the best entries. Whereas if we can get better at using level 2, we can get better entries and then use the chart to kind of confirm those entries and whatnot. Any questions? That's all the film I have. And if it's all right with you guys, I'm going to hold off on the chart reviews. We'll probably have a webinar on Sunday night before the start of next week. I didn't know the film would take an hour, but so we'll let the last 2 days go by before then having a thorough chart rundown on Sunday evening, or maybe Sunday afternoon, somewhere in there, on kind of our charts, because I don't want to jam too much into one day. Any questions on the film that we've watched here? I can help you with that stuff here after I wrap this up. We'll talk about what platform you're on and stuff. Where can you learn about level 2 trading? I've got a whole lot of level 2 videos in our video archive. That's the level 2 section. I just linked you to it. Alright guys, I'll stick around and chat for a few minutes here to follow up with you guys about anything. Otherwise, thank you for attending here after hours, and I'll see you tomorrow for our last live trading day of the year. Let's make it a good one. Thanks.